On our previous video, we shared that SPY retested 406.15 support, held that level, and that it was heading towards 411.88 resistance. Coming into today's trading session, we did retest that 411.88 resistance and had a major sell-off reaction back down, now trading at 408.07. So since we are in this consolidation between 406.05 and let me just change this to 406.05. Since we are in a consolidation between this base, what we are expecting is anytime that we have a massive imbalance movement and price action begins to consolidate, this is basically setting up the next this is setting up for the next imbalance move, because the way the market moves is that we get a balance range followed by an imbalance range. Anytime we have an imbalance, price action is then followed by a balanced range, which is a consolidation, or another ways for it is sideways action, where price action digests the massive imbalance move that we had, and then the next move will be made. So now that we have retested resistance and clearly rejected resistance at 411.34, what is going to be next? Well, we're going to target 406.05 tomorrow in anticipation of a retest at 406.05. And since this is the fourth retest at the support line, if we lose this level, because we are going to be under heavy selling pressure, if we lose this level at 406.05, we're going to fill these gaps one by one, with the first gap being at 403.67, second gap being at 401.41, and then the final large gap at 395.74. So if we lose 406.05 tomorrow, then we are going to get a much bigger sell-off all the way back down to fill these gaps and retest, come back down to retest the 200 SMA line. So we can also see that we have a potential double top formation taking place on the S&P 500 after today's rejection, and we will be looking at the 406.05 as the neckline support for that double top. If they get below 406.05 tomorrow, this is very bearish towards the mentioned gap fills at 403.071 first target, second target at 401.38 area, and then the third price target is going to be at 395, which is the final gap there. So this is our price targets going into the rest of the week as well as next week. Let's go over the QQQ. On the QQQ, we had a massive breakdown candle. This was setting up. We saw 2 to 3 demand candles here, but we kept telling our members that price action is way too overbought on the tech side, and that we are going to get a retest at least at the first gap fill at 308. So this gap fill at 308. And then after the gap has been retested at 308, then we would go all the way down. If momentum still persists and momentum is still strong, then we would retest 303, which is the previous breakout here, turned into support. And if that doesn't hold, then 295. But there's a great chance that buyers can come in at a retest of 308.19 gap fill area. Actually, I'm sorry, this is not the gap. The gap is down here at 307.12. So this is what we're going to be watching. So since we had the breakdown on tech, what we are going to be watching is the gap fill area at 307.12. This will be our first price target on QQQ. And team, we need to have a conversation about something. The reason why I don't follow strictly just one price action is because for this reason, you're going to need a measurement that tells you how far the S&P 500 or how far price action is from the home base moving average. Many traders do not have that, and they easily get trapped into positions trying to catch a falling knife. They will get psychologically tricked into positions because they have nothing that measures just how far price action is from the home base and how they need to wait for that price action to come down. So if we look at the S&P 500, we can see price action is just too far away from the 200 SMA line, and for this reason we have been taking a neutral to bearish approach on the S&P 500, especially on tech. We have been saying for 2 weeks now on tech that the market can just not push higher despite all the FOMO and everything that's in the market. The market cannot push higher because tech is just too overbought from the home base. Tech went from 258 all the way up to 320 before seeing any sort of corrective pullback. We definitely saw a nice healthy corrective pullback from here, and that's what we need to see again. We need to see a pullback at least for this magnitude towards 307.12 before seeing further upside. Now, in the previous video, we did talk about several price targets. We said that if we do get below 286.1 on Microsoft, we're going to see a retest at 280, gap fill 280.53, and then the second retest at 275.37. We haven't seen the gap filled yet. We did come down. We did have a major flush operation down towards 280, 281, but we have not filled the gap yet. The gap on Microsoft is at 280.57, and there's a great chance that we are going to see that gap filled sometime this week, especially as we lose support below 282.01. Once price action goes below 282.01, we're going to expect 280.53 to be retested, and then 278.90. And if 278.90 doesn't hold near where the previous breakout support is, there's going to be a great chance that we will fill this gap at 275.35 on this potential head and shoulders pattern on Microsoft taking place on the hourly time frame. So if I were to chart this head and shoulders here, what the head and shoulders is basically signifying to us is that we have a basically we had a higher high here that was taken out by another high that was taken out by another high, which tells us that the market was under bullish characteristics. However, what are we seeing here? We saw a high being placed here, then we saw a lower high, so we had a high being placed here, right? Then we saw a lower low, and then a lower high, and then another lower low below this low, and then another lower high below this high. And now what are we going to expect? We're going to see another lower low below 282 down to the 280 level, and then possibly very, very likely 279.40 just to stop out all the bulls that'll enter at 280. And if the market does not reverse at 278, then there's going to be a great chance Microsoft will fill the gap at 275 as well. So definitely keep your eyes out on Microsoft and continue to short the spikes, expecting further downside to come. Now let's go take a look at Apple. Basically, when Apple was trading around 166, we said that we would get a pullback down to retest the gap at 160, and we have so far filled that gap at 160, and we are now trading inside of this drop base, which is then going to be followed by another drop, because this is the formula for supply and demand. So what is the next drop going to stop at on Apple? Well, we have a gap at 157.65, and then we have the previous breakout now turned into support. The previous resistance breakout turned into support at 156.08, which we believe will be retested. So the first price target is going to be a retest at the 200 SMA line, as well as the gap fill here at 157, which is another $3 drop from here on Apple before buyers start to come in and kind of balance things out. At the moment, I have been saying for 2 weeks, team, the market is too overbought. Tech in general is too overbought and is due for a pullback. Now let's go take a look at NVIDIA. We mentioned NVIDIA on our video as well. The rising wedge has been tightening for some time here, and we can see that we are clearly tightening, and finally it looks like there's going to be a major imbalance move to the downside, as we not only have a bearish rising wedge in play, but we also have a head and shoulders pattern, which tells us that there is a trend changing structure taking place, where we go from higher highs and higher lows to now making lower highs and lower lows. So the next lower low you're going to want to watch for a break below 264.21 towards 259.61 target, and if 259.61 target is lost, then we are going to see major downside towards 241.22, retesting the previous breakout on NVIDIA. This is what we are going to be watching. This would fire the inverse head and shoulders as well as the bearish rising wedge. And keep in mind, team, this can happen pretty fast, because when you have a trend structure, especially when you have a bearish rising wedge and then you have a bearish head and shoulders, the stock is going to be under heavy selling pressure, and the movement is going to take place pretty fast. So we talked about NVIDIA on our previous video when the stock was trading at 274. Now it's already down $10 at 264, and we believe there's more downside room to go towards 259 first, and then 251, and then 241. 241 is our main price target in a very likely scenario to take place. So here's what we anticipate. Any bounce, any short-term bounce that you see on NVIDIA, you should confidently short it until we come back down towards 241.68 area. Now we're going to look at Meta. Meta was another trade setup that we looked at on our previous video, and we keep on saying the same narrative because the stock is still trading in these ranges. We have been retesting the upper side of the bullish channel resistance multiple times now. We did it here, we did it here, we did it here, and now we did it here again. And you can clearly see that the candles are getting smaller and smaller and smaller, while the RSI clearly shows that there is selling pressure, and the TTM squeeze also tells us that price action is really starting to cool off and unable to push higher. Once the candles get small like that, it is a clear signal for further downside to come. So with Meta trading at 215, we anticipate further downside to come at 200 next, and then the gap fill at 181. So this is what we will be watching on Meta. And just to show you, we have been trading Meta on our Discord back to back. We made over $300 on Meta alone. Pretty much all of my day trades on stock options were on Meta. We bought this first trade on Meta, April 21st expiration, to 12.50. We bought it at 2.95, and we ended up selling this one at 3.65 for $70 profit. And then we got into two other Meta contracts, and again, you can see I bought 3 Meta options in a row as a day trade alone, and then I bought another one on the swing trade. The reason why I kept adding to Meta with different strikes is because we were very confident that we will continue to see downside at these levels. Despite seeing very little downside on Meta, we already made great profits, and there is so much more room to go to the downside, and we cannot wait to continue to short this stock to the downside. So our second trade on Meta, we grabbed 2 contracts for the April 14, 215 put at 1.74, and this contract just played out beautifully because we got this contract on purpose at that level in anticipation of the option going deep in the money and providing significant value for us. So you can see this is the area that we were loading up on the options contract, and it went all the way up to 2.70. So the contract went by $100 alone for these 2 contracts. So that was $200 right there. And then we bought 3 more Meta, and for this one we said it would be a very quick day trade. So sometimes what I do with these trades is that when I observe the stock for some time and I understand its movements, I get very confident and enter puts with a slightly heavier size in anticipation of catching very small profits. For example, we bought 3 Meta April 14 215 puts at 1.55, and we sold them all at 1.75 for $60 profit. We also bought Tesla as a hedge, and that did not go well. This is because we were into too many puts positions, and we wanted to get some upside exposure. So So we sold our metas here, and yeah, we also bought a meta July 21st 180 put, and this is going to be a swing trade because what we believe is that we believe there's significant more downside to go. First at 200 gap fill here. Let me highlight the gap so that we can see it. There's a gap down here at 200, and then there is another huge gap at 180. Now keep in mind there's also another super insane gap at 153, but we are not going to target that for now. For now, we are only targeting the 200 and then the 180. So considering that meta is at the top of this bullish channel, considering that meta is trading at the resistance of this bullish channel, we anticipate it to come down to retest the support line of this bullish channel around the 180 area, and this is why we are bearish on meta. I mean, you can see we are just so far away from the 200 SMA line, with the 200 SMA line trading at 156 and the stock trading at 214. This behavior in majority of cases is followed by significant downside to come. So again, what are we short on? We are short on Meta. We are short on NVDA. These two stocks are going to be high probability trade shorts. For Microsoft and Apple, we're only going to play the momentum of the market. For example, looking at Microsoft, we can see that we have a bearish head and shoulders, and Microsoft basically has not fired its squeeze on the 4-hour time frame. Ever since price action rallied from 245 all the way to 295, we have not seen a cool off, and this will be a proper cool off down to 280 area and even 275. So if the market continues to be bearish, you can short Microsoft and Apple as day trades while swing trading Meta, as well as day trading Meta puts and NVIDIA puts, confidently knowing that they are too overbought and due for a corrective move to the downside.